This is Talkback 721-1290 or 1-800-568-5309.
This is Newstalk KGVO, AM 1290 and 98.3 FM. KGVO, Missoula's news and weather station.
Hey, good morning, everyone, and welcome to the Wednesday, November 13th edition of Talkback. Talkback this morning is brought to you by 123 Seamless Gutters. Let them handle everything that has to do with your gutters so you don't have to. Now's a good time to do it before the bad weather. Call 406-240-2669. They're protecting the foundation of your future. Also brought to you by Harrington Surgical Supply. Their mission always remains the same, to restore confidence and comfort into your daily life. Y West Storage is out at the Y, of course, on Two Smokes Way. If you need a storage unit, why not give them a call? Find out. 406-510-0590, because they're making room for you at Y West Storage. Phillips Janitorial does both residential and commercial cleaning. That means your home and your business. So, hey, why not just give them a call today and get a free estimate? Call 406-260-6617.
The views and opinions expressed on Talkback are not those of the staff, management, or advertisers.
Well, welcome, everybody. Good to have you along this morning. I'm Peter Christian, the fabulous Nick Christensen right over there. Good morning, Mr. Nick.
Good morning.
All right, and joining us in the studio, the equally fabulous and Natalie dressed, by the way.
Oh, yes.
Walt Kero, our resident CPA. How you doing, pal?
I'm doing wonderful. I brought gifts, so
I saw that. Yeah,
diet gifts.
Yeah, yeah, right. I didn't know Krispy Kreme made diet donuts, but
well, those are the ones with a hole in the middle. You know, that's
gotcha.
where all the calories are in that donut hole.
All right. Anyway, so here we are, and it's been a while since you were on the phone one of the times that we last had you.
Yep.
But you're back in the studio now. Tell us about your travels.
Rock and roll. Oh, we visited grandkids in Olympia, Washington. Actually, Lacey, stepson is in the JAG Corps. He's, in the Army, and so he just moved there last summer from Williamsburg, Virginia.
If I remember my pronunciation, that's Judge Advocate Corps, right?
Yep.
Go ahead.
Yep. The attorneys for the military. So they do all kinds of stuff too, whether it's writing wills or defending people that get in trouble and all that stuff.
All right.
But anyway, we had a good time with the grandkids on Halloween, and they live in a housing complex. And man, it doesn't take very long to get a lot of candy, both received and given.
Right. So did you keep some for yourself or?
No, we try to minimize that. Don't eat all those carbs.
I'm hip. All right.
Yep.
So you as always have brought what you lovingly refer to as your stack of stuff.
Yes.
And so, by the way, for those of you who are new to the show and you don't know Walt Kero is the owner of Kero Byington and Associates, one of the most respected CPA firms in the state. Been over 50 years of experience doing taxes, and he is here to answer your tax questions. That's why he's in the building today, as he is a couple times a month. So if you have a question about your taxes, maybe you got a confusing letter from the IRS or the Montana Department of Revenue, or you've got questions about what you're doing, with your will, all that kind of stuff, give us a call. If it has anything to do with taxes, 721-1290 is our number, and that's why Walt is here. So
yes, we'll give you general answers to general questions. If it gets specific, beyond my wheelhouse, I'll refer to attorneys or whatnot. But as it goes, we're here to help do two things: answer your questions, but also to educate. Taxes are just one bit of financial literacy, but it's important for us out there to know what the heck is going on.
It's important to have the proper information about taxes, because if you take a misstep with taxes, it can dog you for years and years.
Oh, yeah. Big time.
Tell you what we're going to do. We've already got somebody on the line that wants to visit with you. So if you have a tax question, get on the phone, get in the queue, and Walt will answer that question for you when we come back from our first break, coming up right now.
Call 123-SEAMLESS.
Dennis Bragg updating the weather. A 40% chance of rain Wednesday starting around lunch and continuing the rest of the day. Mostly cloudy, not too cold with a high around 48. Lows will drop below freezing Wednesday night, so some areas like the higher valleys could see mixed rain and snow. Rain likely to continue at times Thursday with a chance of precipitation at 60%. It'll turn colder Thursday night into Friday and the weekend. Overnight lows in the mid-20s, highs in the upper 30s at best. That means we could see some snow down into the valleys.
Hey, we're back on Talkback. Gosh, we must have explained that pretty well about the whole tax advice thing, Walt, because the phone lines are already lighting up, or people have been missing you. I think that's what it is. Let's get Kathy on the line first. She's first with a question for Walt. Good morning, Kathy.
Hi, Kathy.
Good morning. I really appreciate you being here. I have a quick question, I hope. My mother passed away in July, and I had a deed of trust that transferred her home and a couple acres to me, and I assumed that would just happen. Obviously it doesn't, and I got her taxes.
No, not really, but anyway, go ahead.
Well, and I got her taxes, and it's still in her name, and it's like, oh God, now what do I do? Do I need to go to the county and do the deed of trust? Tell them to transfer it and then ask for another tax.
How about an attorney?
For the property?
Yeah, you can try that on your own. I would suggest getting an attorney to help you. And, because I would imagine that property's worth a fair amount of money.
I'm not sure, to be honest. Right now, it just feels like a tremendous burden.
Oh,
but,
okay. Okay, Kathy, here's a couple other things. There's a tax implication to what you, when you inherited that property from your mother, you should either get a realtor's current market analysis, or the IRS prefers to have appraisals. And you get that appraisal and you get the market value of that property at the date of death. That becomes your tax cost. So if you subsequently sell that property, all your mom's capital gain in there is gone. It's kind of, you get what we call a step up in basis. And that's very beneficial for you should you sell the property. But you have a paperwork issue to deal with to get the property into your name. So it may be as simple as going down to the clerk and recorder's office and recording that deed. If that deed is a beneficiary deed, that may be all you need to do. But I would suggest seeing an attorney first, making sure all the T's are crossed and I's dotted so that you get it and somebody else doesn't sneak in there.
Okay. Oh, God. Somebody else could sneak in there? That's not good.
Well, the chances of that are remote, but you want to prevent anybody from trying to get involved because, what is that? There's these insurance programs you can buy to protect your title, home title lock, and
right.
There's several businesses on the internet out there to, safeguard your property. But in Montana, I don't think we're as high at risk for that, but. I could be surprised.
You need to do everything possible to protect yourself and your family, and because I know this is a tragedy that occurred in your family, but these are things that need to be taken care of, and I'm really glad you called because you're talking to the right guy with Walt.
Okay, well, I will make an appointment. So thank you.
You bet. The sooner the better, too, Kathy.
Best of luck to you, Kathy.
And if it's due December 22nd, I have until then. Otherwise, I'm going to pay penalties, right?
Well, I'm not sure what December 22nd is, other than a date on the calendar. Is there some deadline there that you have
for the land taxes?
Yeah. Okay. Well, that's a whole different question and is interesting. But, yeah, you don't need to have the title in your name. You can go pay those taxes now. You don't need to wait. And just as long as you give them the bill, they'll give you the credit.
Okay, that sounds great. Thank you, Walt.
Thank
you.
You bet.
I really appreciate it.
Thank you. And
good luck, Kathy.
Yeah, let us know what happens, because this is important. You're a first-time caller, and we value you, okay?
Okay, thank you very much.
Thanks for the call, ma'am. All right. Tell you what, go ahead. Let's get Dennis up next. Dennis, good morning. You're on Talkback. Hi.
Hi, good morning.
Hi, Dennis.
I have a question. Hi. I pay estimates, quarterly estimates, to cover taxes for any income that I make during the year.
Right.
Now, if I was to sell, say, stocks and that have a capital gain, do I have to then increase those quarterly estimates? Or are the...
Okay, go ahead. Go ahead, Dennis. And finish
I
your
just
question.
wonder, are capital gains a whole separate thing and you can just pay whatever on tax day?
Okay, this brings up some interesting points and comments with regards to the tax system. You usually make your quarterly estimates based upon your prior tax year. And let's just assume your prior tax year, you didn't have any capital gains. If you make your estimates, has you calculated them for the current year based on the prior, then as long as you make them timely, you won't get into any penalties and whatnot. But the thing is, if you have a current year capital gain, then when it comes time to file the return, you probably will owe more money that your estimates did not cover. And so it's a question of whether you want to pay them now or later. If you follow the estimates that you were given for last year, shouldn't have any penalty. So it's better just to pay the tax when you file your return, but that's with the big caveat of being a good boy and paying all those estimates on time, as Peter well knows. So that's fine, but sometimes, are you getting any IRA distributions? Are you caught up like me with those required minimum distributions?
Yes, but that should be figured in from last year, right?
Yeah. I'm going to cover this later, but this is what I do. And in an article I came across, it's the same thing. I have huge amounts withheld from my required minimum distribution for federal and Montana income tax withholding. And I do that to eliminate or reduce what I have to pay in estimates. And so it's just a suggestion and a tip. That's all I'm going there with that, Dennis. You understand what I'm going to?
Oh, Dennis? Okay. Well,
that's too bad.
Dennis, we lost you. Tell you what, we're up against a break. We're going to come right back, and we have Kevin and Steve both standing by, and several other phone lines are open. People are already jumping in, getting good advice from Walt Kero. So give us a call at 721-1290, 1-800-568-5309, or if you'd like, if you're not near a phone, download the KGVO app and hit the Message Us button, and we'll get that message to Walt as well. Back after this.
Need talk?
With KGRZ Sports, I'm A. Sauerwein with your daily update, brought to you by Republic Services. Scores from last night, Monday Night Football, it was the Miami Dolphins edging out the Los Angeles Rams. Final score from SoFi Stadium, Miami 23, LA 15. The Dolphins are now 3-6. The Rams dropped to 4-5. College basketball scores from last night. Eastern Washington hung with the Missouri Tigers out of the SEC before falling 84-77. Eastern's now 1-2. Idaho State collected their first win against a non-Division I opponent, as did the Cats. Idaho hung with Washington State through a half before the Cougars pulled away in the Battle of the Palouse. The Vandals are now 1-2. Women's college basketball scores from last night. A couple of Big Sky teams hung with some Mountain West opponents. Northern Colorado lost to Air Force 73-66. Idaho State dropped by just 11 against San Diego State. And AU defeated a non-Division I team. That's a look at sports. I'm Ace Sauerwein.
Suck it up.
It's not a big deal.
Snap out.
Just get over it.
We've all heard it. But if you're experiencing extreme stress, it's not just in your head. It can affect your entire body because toxic stress can hurt us physically without us even knowing it. If you've lost a job, worry about your next meal, or have trouble making it through the day, if you're feeling the effects of stress, we can help. Text stress to 211-211 to find a solution.
Okay, welcome back to Talk Back. Peter Christian here. Nick Christensen taking your phone calls this morning. Walt Kero, our resident CPA from Kero, Byington and Associates, here in the studio with us, sharing his knowledge and his over 50 years of tax preparation experience. Kevin is on the line right now. Kevin, good morning, sir. You are on Talk Back. Go ahead, please.
Hi, Kevin.
Well, good morning, Walt, Peter, and Nick. Walt, now that President-elected Trump is going to be our president again, one of the things that he promised that he was going to do is there's not going to be any tax on tipping for servers or anybody who receives a tip.
Right.
A couple questions. I don't know when he's going to implement it and when it will go into effect. Maybe you can explain that to us a little bit. And one of the questions I have is how are you going to, or how is this going to be implemented if you are like a gig economy person, and for the employer, how do the employers, I guess what the rules are or the laws are, because there are some employers who do not tax or take tips. Take tax from some of the servers.
Yeah, they don't withhold. Yeah, go ahead.
Right. And I was just kind of curious from your perspective and from you talking to your other colleagues, exactly what we should look forward to understanding or what will be implemented.
Oh, okay. Yeah. That's a complex issue. Right now, the tip income is, or compensation or gratuity, if you want to call it all that, is taxable. And whether you report it or not, it's taxable income. And the reason is it's considered compensation for doing a good job. So, as they say, no good deed goes unpunished. So, the problem with tips from a tax point of view is you have to deal with Social Security and this and that and the other thing. It becomes a reporting nightmare for employers who employ people who do get tips and go through. The reporting is just mind-numbing, and it's just crazy. So, on the one hand, if you eliminate tax on tips, it's going to be a godsend for tax reporting. It kind of goes against my grain of understanding that it's a gross receipt and the tax laws call it income. But if the politicians and the powers that be want to untax it, that's fine with me. Also, Trump talked about not taxing overtime pay, which is cool. Because that goes back to my days when I worked for Elk River Concrete, making concrete pipe and working overtime and saying, hey, I'm working harder and I'm not getting ahead. This don't make no sense. So there's that. Plus then also Trump is talking about not taxing Social Security. And all of those things would be beneficial to taxpayers. It would cost the Treasury quite a bit of money, right. But I think the offset, at least from what I'm hearing from Trump, is he's going to make up the revenue loss in tariffs. So, away we go.
Okay, the way, Walt?
Yeah.
Yeah. What would stop, let's say, somebody who owns a business that does have a lot of tipping involved, saying to an employee, and say, well, you know what? this tipping is part of your income if you're an independent contractor. Therefore, we're not going to consider it to be a gratuity, but part of your income instead.
Yeah, you're going to have to work that out with whoever is paying you, because you're exactly right. If they consider it just income and don't split that out. Now, I don't understand all the accounting for Uber and Lyft and all these current income stream functions from the gig economy and whatnot. But if I understand that they've already worked gratuities into the fee, so when you call up Uber and you have an account with them and you use the service, your account gets charged, and that includes the tip. If that's the case, it's going to be hard to untax it unless Uber changes its accounting. So anyway,
same goes for like a pizza delivery driver. If I give them $10 because they brought the pizza in a hot bag and it's hot and in a timely manner, and I give them $10, and that $10 instead, he has to put it into a locked bag. Have you ever seen it like in casinos? Mm-hmm. They give them a locked fanny pack.
Yeah.
So they have to take it back to the employer. Therefore, the employer will say, well, instead of paying you $12 an hour plus tips, we're going to go ahead and instead give you so much an hour, and you reduced hours and your tips or some of your tips. You know what I'm talking about? That's what I've been trying to see. And why is it that now the employer is going to be in charge of confiscating the tips? Basically, you know.
Well, that's a potential, but I let's just say the Pizza Hut dude comes and you give him $10 for the pizza, and you say, "Oh, hey, here's $2 for being timely or whatnot," and he gets the $2. If he physically gets the $2, who cares, right? It's all a done deal. You see what I'm saying?
Right. The thing is with the technology now, Walt, that they have, if you go to a casino like in Spokane, whatever, the workers have to, because they're under surveillance, has to put that money in their fanny pack that has a little lock on it.
Right.
And then they take it to the back room where there was a supervisor there that they go ahead and do the divvying up.
Right.
My point is they're taking that money that was given as a tip, as a free gratuity, but they're going to be counting that as maybe potential income.
Yeah, if there's a way of identifying that it's a tip, you know, and through the employer, if they can do that and identify it, I don't see why that's not allowable or would that should pass muster as long as you have accounting.
I guess I would be kind of, if you were in that business, you along with you explaining what my benefits are, such as 401ks and whatever that the employer is going to put in, the employer needs to let them understand and know that their tips can be called as, some of it can be called as an income.
Yeah, and tax exempt. But that reminds me, back in my early days when I first got in doing tax returns, the waitresses in the Space Needle, the IRS went in and nailed them on unreported tips, and they just used estimates. The IRS used estimates and said, "Hey, 14% of your of the revenue that the restaurant in the Space Needle got would have been tip income." And it was kind of conservative, but they made it stick, and the courts upheld it. So you had a whole bunch of waitresses and waiters and whatnot in Seattle got stung because they didn't report their tip income.
Right.
Yeah.
Hey, Kevin, we're up against a break. Thanks for the call. We appreciate it. We're going to come right back from the break and talk with Steve. By the way, almost all of our phone lines are open. If you have a tax question for Walt Kero, that's why he's here, to answer your questions just like Kevin. So we're going to come right back. Hopefully we'll get Steve's call on and yours as well. 721-1290 is our number. Back in a minute.
Dennis Bragg updating the weather. A 40% chance of rain Wednesday starting around lunch and continuing the rest of the day. Mostly cloudy, not too cold with a high around 48. Lows will drop below freezing Wednesday night, so some areas like the higher valleys could see mixed rain and snow. Rain likely to continue at times Thursday with a chance of precipitation at 60%. It'll turn colder Thursday night into Friday and the weekend. Overnight lows in the mid-20s, highs in the upper 30s at best. That means we could see some snow down into the valley.
Suck it up.
It's not a big deal.
Snap out.
Just get over it.
We've all heard it. But if you're experiencing extreme stress, it's not just in your head. It can affect your entire body because toxic stress can hurt us physically without us even knowing it. If you've lost a job, worry about your next meal, or have trouble making it through the day, if you're feeling the effects of stress, we can help. Text stress to 211-211 to find a solution.
Okay, we are back on Talkback, 721-1290. That's our number. I'm Peter Christian. Mr. Nick Christensen over there taking your phone calls this morning. And Mr. Walt Kero Esquire is here in the studio, our resident CPA. Let's get Steve on the line. Steve, good morning, sir. You are on Talkback. What's up?
Hi, Steve.
Hey, good morning. Thanks for KGVO for having you on so consistently, Walt. Thank you for volunteering your time. We really appreciate it.
I enjoy doing this. That's, I love what I do here.
Well, it comes through, so thank you to both groups. Two questions for you. One, you can take them in either order. If I could hang on the line while you answer them, I sure would appreciate it in case I need to clarify anything.
Sure.
The first question I have is, I had a W-2 job from the time I was 14 till, call it 50 years old, so approximately 35 years.
Yeah.
Job where I would receive a W-2 and pay Social Security tax. I now work for myself, and I'm curious, I read something that kind of freaked me out. I have not been paying Social Security since I work for myself, and I'm wondering, am I correct in what I've read? Where, and I'm not close to retirement or being able to draw on Social Security yet either, by the way. But what I read was that effectively the Social Security Administration takes the average of like your last 3 years of Social Security contribution, and that then becomes your distribution. And so I'm worried that I went from like an insane amount of Social Security I paid over those 35 years of working to now I'm not, and all of a sudden I'm not going to have any Social Security benefit that I paid into the Ponzi scheme for 35 years on. And I was wondering if you know anything about that, if there was anything you thought I would need to do to get back on that schedule to make sure I capture what I'm owed, basically. That's question number one.
Okay. But, you want me to answer? I'll answer this one right now.
Sure, go ahead. That one hits me in the pocketbook, yeah.
Okay. Hey, Steve, it's a great question, and here's what I know. I don't know everything, but here's what I know about this. Because I am on Social Security, I'm going to be 75 next May, and so I've been collecting for almost 10 years. But the Social Security, your benefits are based upon your 10 highest yearly Social Security or income. Now, they break that down into 40 quarters, but it's 10 years. So regardless if you're working on W-2s or 1099s as an independent contractor, they're going to use the years with the highest income to calculate your Social Security payment. And, if you want to get more information, you can set up an appointment with Social Security and you can beat it to death with them because they're really good and they're not adversaries.
I will tell you this, if you don't mind me jumping in here real quick. I have actually met with Social Security here in Missoula. They have a local office.
Yes.
And they're pretty accessible. So it's not like trying to deal with the IRS, okay? It's totally different. And they have a local number, and you just make an appointment and go on and talk to them.
Yeah. The other thing that's important, Steve, is now that you're working for yourself, and Peter knows all too well about working for yourself, besides paying income tax on your net from your business, you're supposed to pay self-employment tax, which is Social Security, but for for self-employed people. So you keep putting in the kitty, even though you're no longer a W-2 person. Okay.
I don't think I've been doing that. I'll double check my CPA, but I don't think I've been paying for the last 2 years based on the way I've been paying myself. But I will double check that. And then Peter had a good point there. I'll reach out to the Social Security Administration locally. That's great advice. The second question I had was the beneficial ownership requirement, which my understanding is anyone who owns an LLC must report by the end of the year on who owns the LLC and provide documentation of citizenship and things like that, which is crazy because you don't need any of that to vote, but that's neither here nor there. But was curious, do you have clients who are doing that themselves, and has anyone sort of told you what that experience is like and how difficult that is to perform, to do it yourself?
I've had a mixed response. Some people got it done, and it was pretty simple for them, but they were, computer literate and were, pretty knowledgeable about filing forms and whatnot. We are tackling with the process of making a service available to our clients or people who need to do that. But the costs are, going to be, $150 to $250 to do that. The good news, per LLC or per entity. The good news is if you don't change ownership, you don't have to do that. It's a one and done. But if you change ownership, like somebody dies and somebody inherits a portion of the ownership, then it's a change, and that has to be reported.
Okay.
Yeah, and I'm assuming your LLC.
At the end of the
Steve, I'm assuming your.
At the end of the year?
Yeah, it needs to be done by December 31st, and I'm assuming your LLC is registered with the Secretary of State.
It is, yeah. A couple of them are, and then I've got one in a different state that's registered in that state. But
yeah. Oh, okay.
Does that matter? Or I thought it was just with the feds. This was only with the feds.
It's just with the feds. It's with the Financial Crimes Enforcement Network. It's called FinCEN.
Right.
Yep.
FinCEN, yep.
It's all done online for the most part.
Okay, cool. All right, well, hey, thanks again, guys. We really appreciate it. Take care.
Steve, thank you for your call, and your timing is exquisite because we're up against a break. We have Joanne and John both waiting, and we haven't even touched the stack of stuff yet, which is great because we'll get to that eventually. 721-1290 is our number, 1-800-568-5309. So if Joanne and John will hang on, we'll be back right after this.
Small businesses are the heart of America. But you don't have to go it alone. As the nation's largest nonprofit resource of expert business mentoring, SCORE has helped millions of entrepreneurs build their businesses for free. Get the connections, education, and guidance you need with SCORE. We're ready to help. Find a mentor today.
Hey, we're back on Talkback. 721-1290 is our number. Of course, we have Walt Kero here in the studio this morning answering your general tax questions from Kero, Byington & Associates. Let's jump right back in and talk with Joanne. Good morning, Joanne. You're on with Walt. Hi.
Hi, Joanne.
Hello. Good morning. I have my brother passed away this summer, and I was designated personal representative for his estate.
Yeah.
And he didn't really have anything, so I didn't hire a lawyer or anything because all he has actually is his account at the bank and an IRA account.
Uh-huh.
And the rest of the stuff was just furniture and stuff like that.
Mm-hmm.
And his vehicles, he had actually given that, he had signed his titles over when he was first diagnosed, so it was 2019.
Yeah.
But I didn't, it just bothered me that he did that because I just waited until after he passed and then I just paid it full like it was a cash sale. I didn't take the credit, and transfer it and save the money. I just paid it like I just bought a car.
Right.
Okay, so then my question is then on the money, I ran into the problem with the bank, and he won't give it to me until he said, finish the estate. Well, if I close the estate, then I can't get the money, right? Because then it means it's all been done. And it can't be done until he transfers the money. And
he's forcing you into a catch-22. But
that's what I feel like.
Yeah, well, I think there's some relief there because, one, you don't need to rush to close out the estate account.
And that's why I've been kind of, it's summer, I've been just fiddling and getting through this and everything. And so now is getting the time that I want to kind of get this straightened out before the year ends.
Right. So the only thing he has, I'm assuming a lot of his stuff, for lack of a better term, you just either took to Goodwill, sold, or whatever?
It's a combination. I still got stuff to go, but there's the couch, and the people have said they're going to take it, but they haven't taken it yet. But like his bed and he did have a rifle and a pistol, but that's about the only thing really of true value that's there.
Yeah. Okay, and then the bank account. Do you? Who are the beneficiaries of his estate? Is it just you?
Well, he made me the only one. But then in his will, he says that I should give it. I would decide what to keep and to give to his nephews, because he didn't have any family. He was never married.
Right.
And so to give to the nephews and grandsons my grandsons and stuff through the family, he just wanted them all to get anything that I felt that they should have.
Yeah. Okay. Well, the thing is I'm not sure. Can you explain to me what the bank's having heartburn about?
I work with this guy. He's very personal. He's a nice guy, but all right, he had me the first money I had. Went to the bank that he was at, and so we put it into an account that says the estate of David Furman.
Right.
That's what we opened up. So now, though, he never gave me any options on how to get it out of the estate for David Furman, and I'd already paid everything.
Okay, Joanne, I am assuming
I paid all the expenses on my bank account out of my savings. So how do I kind of do this for taxes?
Okay.
Once and to get it.
Okay, if you paid for some of the estate expenses out of your own bank account, write yourself a check to reimburse you from the estate account. Okay?
But he never gave me any checks, so can I demand checks then?
You can get, if you want to go on the cheap, you can go to the bank and say, hey, I need 4 or 5 or 6 or 10 or 12 counter checks. And,
okay.
And, the bank hates dealing with them, but I've used them before in situations like what you're dealing with here. So, one, you need to do that to reimburse yourself from the estate for estate expenses that you paid yourself, right?
Okay.
That's one thing I'm hearing. The other thing is if there's a balance left in the estate account, there's nothing to prevent you from writing a counter check to you or to whoever, niece, nephew, grandchild, whoever, that you want to do that to. And, and then you just close the account out by just writing checks so you get to zero.
Oh, okay, because I didn't know if it just could do it that way or not. So can I just have it then transferred to my account?
You could, but I would write a check.
Write a check?
Yep, that way there's a paper trail. Now, you can do a transfer. There's no problem with doing that. It's just I don't like doing transfers where you want to leave a paper trail because you're a fiduciary for your brother's estate, but you're also a beneficiary. So you kind of almost have a built-in conflict. Not that one's there, but, if somebody's on the outside and got a beef, they'll beat up on you like no tomorrow.
That's what I've been kind of worried about. I've been actually kind of waiting until you guys came on so I could ask you this. I didn't really want to pay for a lawyer, and then I do all the work.
Yeah, but if you're fearful of getting inundated with greedy relatives, then you should get an attorney.
Yes, and right now that's why I figure I can get it done and get it closed out. There's nobody that's upset.
Okay. Yeah.
David's relatives are very few.
Well, Joanne, I'll tell you, you're very wise in calling Walt for advice because I think he's giving you some good stuff.
Okay, well, thank you very much, and I appreciate this. One quick question then. What all do you have to list as inheritance?
Oh, okay. Well,
you have to list all the. He didn't have hardly anything but furniture and stuff in the house and computer.
No, and this is where an attorney comes in. Because a lot of that you could just list the personal property has less than $1,000 or less than $5,000 because you got the guns and then the cash and the cars were already. Transferred on death? Is that how those titles were done on the vehicles?
No, actually, he wrote those out when he first got sick, and he wrote the names of who all we want on them, and had them all notarized.
Yeah, okay, so those are
19.
Yeah, those are what we call specific bequests, and you would list them in the inventory and then the dollar value what those vehicles were. But it sounds like you're going to be way under $100,000 in value. The one thing I will tell you, you said IRA. Whoever gets the IRA is going to have to pay income tax on that when they get the money. When they get the money, and a non-spouse IRA beneficiary has got to report that in income over a 10-year period.
Well, Joanne.
Okay, thank you.
Thanks for the call. We're going to come right back. We're going to get John's call when we come back. We're up against a break. We have several phone lines open, and if you have a question or a comment, just like Joanne did, or Steve, or any of the folks that have called today, give us a call, 721-1290. That's why Walt is here. We'll be back in just a moment. Timed this beautifully. We have one more call and just a few minutes left in the hour, so let's get John on the line. John, good morning, sir. You're on with Walt Kero. Go ahead, please.
Good morning, Peter and Walt. How are you today?
Great. Better than I deserve. How are you, John?
Good. So I haven't sold a house in about 20 years. I know the laws have changed.
Yeah.
So what are the income tax ramifications of selling a long-term primary residence home?
Oh, okay. Is it owned by you and a spouse, or is it just by you?
Joint with my spouse.
Okay. It's joint with your spouse?
Correct.
Okay, it's critical because if you qualify, and here's the qualifications, it's a real simple test, but it's kind of wordy how you get there. But if you own and live in the house as a personal residence for 2 out of the 5-year period prior to the date of sale, then you qualify for the I'll use the code section 121 exclusion. And for a married couple, that exclusion is $500,000 of gain, not sale price, but gain. So if you sell your house for $1 million and you bought it in 1973 for $80,000 and you had $20,000 of fix-ups, you have a $900,000 gain. Well, you get to exclude $500,000 from the $900,000 gain. So you have a capital gain on $400,000. That's just, I'm using hypothetical numbers here, but you would be qualifying for that, John.
Okay, so in my case, I built this house, so I would have to show building costs to offset the primary investment.
Yeah. You keep track of all your costs, including the purchase of the land, all the permits you had to pay for, the the approach permit, the septic permit, the electrical, all that stuff. Yeah, you accumulate all that, and that's your cost. And then any major improvements you made to the property, and, are you up where there's wells and septics and all that?
Yes.
Yeah. So all of those costs you add up, and, that adds up. You build up what we call your tax basis. So all that's included. You get, if you have selling expenses, you get to include those as a reduction of the gain and whatnot. So does that help any?
So you have those costs. And then you have the $500,000, and then anything over that would be capital gains.
Yep, that's right. Mm-hmm.
Okay. Very good. Thank you.
You got it. Hey, good luck, John.
You bet. Thanks for the call, John. We appreciate it. All right, we've got about a minute and a half before we're done. You want to try to jump on one of those, your favorite top 10?
Well, yeah, I'll just go over the ones that are kind of quick.
Okay.
There's a report out that the average age of a U.S. home buyer in the past year was a record high of age 56.
I believe it.
And that's because the price of housing in many, many states is through the roof. And so only if you're established can you get into a house. So for young people,
right,
it's going to be brutal. The BOI reports, and I think it was Steve who brought that up. Anyway, on the BOI update, now they're expecting 32 million of these forms. And through mid-November, they had 6.5 million. So they got 80% to go. So that's going to be a good one.
Tell you what, we have another hour to take calls from you folks. If you have a tax question, and Walt's been just breezing right through and helping folks in lots of different ways. So if you have a tax question, give us a call, get in the queue, and we'll put you on right after the top of the hour, which is coming up. The number is 721-1290, 1-800-568-5309, or you can use the KGVO app. We'll be back for another hour in a moment.
This is Talkback, 721-1290 or 1-800-568-5309.
This is Newstalk KGVO, AM 1290 and 98.3 FM. KGVO, Missoula's news and weather station.
Good morning once again, everyone. Welcome. It's hour number 2 of the Wednesday, November 13th edition of Talkback. Talkback this morning is brought to you by Y West Storage out at the Y for pricing and availability. The number is 406-510-0590, where they're making room for you at Y West. Phillips Janitorial offers cleaning for your home and your business. No job too big or small for Phillips. 406-260-6617. Also brought to you by 123 Seamless Gutters. Top-notch customer service. While the weather's still clear, give them a call. Let them work on your gutters at 406-240-2669, protecting the foundation of your future. And by Harrington Surgical Supply. You can feel confident in their discreet and knowledgeable guidance on a multitude of products and medical supplies.
The views and opinions expressed on Talkback are not those of the staff, management, or advertisers.
Okay, welcome back, everybody. It's hour number 2 of Talkback this morning. Joining us here in the studio, our friend Walt Kero from Kero, Byington & Associates, our resident CPA. How you doing, Walt?
Oh, better than I deserve. And I just thought of something for Joanne to consider.
Okay.
There's some legal assistants out there, and sometimes attorneys will do pro bono work, and they're required to do some. And so, I'm assuming that I would try to avail myself if I was her.
Absolutely,
on that.
Yeah. The better advice you can get, the less you have to worry.
Oh, yes, for sure.
All right. Of course, Nick Christensen's over there taking your phone calls this morning, and we already have 2 folks waiting on the line. Let's jump right in and get Mark up first. Mark, thanks for holding. You're on Talkback with Walt.
Good morning, guys, and Walt, thanks for being on as usual. Appreciate it.
Oh, you're welcome. Thanks, Mark.
Missed you last week, but we got put in place with our political folks, and everything ended up the way I wanted it to.
So Santa came early to your house like he did mine?
Yeah, he did, and I'm just looking forward to the first of the year. Hey, question for you. My wife and I are over 67. We're both collecting Social Security. Mm-hmm. We were talked into this about 8 years ago to put our primary residence in an LLC for protection. Essentially, there were other advantages, or, I can't think of them right now that she had mentioned. So we've got that in an LLC. We also have a piece of commercial property that's in an LLC, and a rental house likewise in an LLC. And I'm wondering, we are not planning on selling any of them, before we pass. Mm-hmm. But I want to make it as convenient to pass on to my kids.
Yeah.
And I am wondering, in your judgment, from a tax perspective, is like the house especially, is it as well to leave it in an LLC, or should it be converted back to it's our personal residence?
Yeah. Okay. Yeah. What you could do to protect it is, I would divest it. I would transfer it out of the LLC. One, because that can be done tax-free, but two, an LLC does not qualify for the gain on sale exclusion that we talked about earlier under Code Section 121. So if it's you personally and you own it and live in it for 2 out of the 5 years prior, you can get that exclusion. Now, you say you're never going to sell it, but I would want to have all my options available, because who knows? But the thing to do is get a hold of an attorney and put it into a trust, what we call a living revocable trust, that residence. Okay. And then you get to preserve that gain exclusion on sale. But, the biggest thing is once it's in that trust, you're trying to protect it from the goblins and all those people out there. So, the sooner I would, get that done, the sooner the better.
Okay. So from a capital gains standpoint, that type of thing.
Yeah, from that standpoint, but then also for asset protection. That's one of the reasons you put it in the LLC to begin with. But if you put this is a legal thing too, and this is why you get the advice of attorney. If you throw everything you own into that LLC and then you get sued, everything and they sue the LLC, everything in that LLC is now fair game. So anyway, some people set up multiple LLCs just to, split up, reduce that risk.
Sure. Okay. And then as far as that other property that we have that is in LLCs, is that the best format to have in place for transferring to our kids then?
Yeah, there's a fair amount of flexibility with that. And, if you have it set up in your wills, or in the case of a trust, to have that property transferred to, kids as beneficiaries, it's a safe and decent vehicle to use.
Okay, perfect.
Yeah.
Okay. Well, great. Thank you.
Okay, Mark.
As always, Walt.
You bet.
Mark,
good luck.
Thanks for the call. Best of luck to you. We're going to come right back. We have Judy, Susan, and Dave all lined up to talk with you.
Hot dog.
This is great. We love this. Mm-hmm. That's why Walt is here. He loves answering your questions. So get in line, get in the queue at 721-1290. We're going to come right back after this timeout.
In a world of complicated...
Dennis Bragg updating the weather. A 40% chance of rain Wednesday starting around lunch and continuing the rest of the day. Mostly cloudy, not too cold with a high around 48. Lows will drop below freezing Wednesday night, so some areas like the higher valleys could see mixed rain and snow. Rain likely to continue at times Thursday with a chance of precipitation at 60%. It'll turn colder Thursday night into Friday and the weekend. Overnight lows in the mid-20s, highs in the upper 30s at best. That means we could see some snow down into the valleys.
We're back. This is Talkback. Peter Christian, Nick Christensen producing Talkback, taking your phone calls. He's been pretty busy today, too. Walt Kero, our resident CPA from Kero, Byington and Associates here in the studio, offering general tax advice to a lot of folks today. And Judy is next. Hi, Judy.
Hi, Judy.
Hey, gentlemen, how are you? Can you hear me okay?
Yes.
Perfect.
Okay, good. I'm on my cell phone. I have a question for you, Uncle Walt, on the 1099 international payments. I hire authors and artists. One of my authors lives in Canada, and the other one lives in Australia.
Yeah.
Do I have to give them a 1099, or do the 1042 apply here? And that's just the foreign person's U.S. source income subject to withholding. Is my 1099 payment okay?
Okay, yeah, Judy, are you okay? I want to make sure I understand the cash flow here. Are you talking about where you pay them, or are they paying you?
Yes. I pay them.
Okay, that's an important distinction, because if they're in a different country, the 1099 requirement, I'd have to go verify, but I think that's for U.S. taxpayers. But then on the other hand, it would be probably safer to file the 1099s with the IRS and give it to them. They have to report their income in their given jurisdiction. And it gets to be a sticky wicket, because the IRS would look at them and say, are you earning that money in this country? And obviously, if this is the creative world, such as authorship and whatnot, they can work and live in Canada or the Northwest Territories or wherever, and they'll be subject to that country's laws. And they don't, they wouldn't have to report that in the U.S. just because they earned it in their country, not here.
Oh, that's a good distinction. I hadn't even thought of that.
Yeah.
I was trying to read the code, and it's got the two wits and whereases, and it's very confusing. It begins generally every non-resident, blah, blah, blah. Well, I think that I will, and it is over $600 that I pay them.
Sure.
And I have another question relative to this. One of the gentlemen wants to trade for his work, and I have airplane parts and whatnot, collections, and say I've got a part that's worth $1,000 and he's charging me $500 to write the book. Can we do part cash, part trade, and I can ship him the airplane part and he can send me a $500 plus on the balance, and we can trade? And, hey, welcome to the art world.
Okay, yeah. Okay, Judy. The answer is yes, you can do that, but you have to consider the barter as an actual cash transaction. So even though you didn't receive the cash, you received value, and you need to report that value as income or as a sale price. Now, one thing I need to add with regards to your Canadian 1099 people, if you issue a 1099 to XYZ in Calgary, Alberta, and the IRS gets it, the IRS is going to go look for, quote unquote, their tax return. And, that may create a Pandora's box. And why don't, do you listen regularly?
Oh yeah.
Okay, I will.
Oh, yeah.
I will look up the requirements for 1099s to non-residents. So I know that if those non-residents were working and living in the U.S. but were non-residents, you would need the 1099. But when they're earning and making the money out of the country, that might be treated different. And there may be a proper way of, there may be a proper way of preparing a 1099 in those situations.
Yeah, the form that I downloaded was 1042./S or -S.
Oh,
and so 1042, and I think that relates to a guy from Canada moving to the Americas and doesn't change citizenship and works for me. I understand that. That makes sense.
Yeah.
And as far as the trade concern is, so I claim that as the $1,000 income, and then I write off against my Schedule C the $500 that I quote unquote paid him through barter.
Yeah. Mm-hmm. Exactly.
Okay. That makes sense. Okay, good. Because when I told my author up in Canada, I said, I got to file a 1099 on you. He said, what the heck is a 1099? I said, he said, we don't have that here. And I said, I'll figure it out. I'll ask my guy. So I've been waiting for you to come back, Uncle Walt.
Okay. Okay, Judy, no problem. And the thing is, yeah, it gets to be interesting. Well, you just tell your Canadian author, well, you have fun with your T4. And that's the Canadian income tax return.
Okay, well, that'll be his problem now.
Yep, that's right.
Thankfully, I've got another artist over in Canada. I mean, over in California, and that's a piece of cake. You know?
Yeah. You bet.
Guys, thank you so much. I appreciate you coming on and helping us out.
Thanks for the call. All right, let's get Susan on the line. Susan, good morning. You're on Talk Back with Walt. Go ahead, please.
Hi, Susan.
Okay. I have a plumbing and sewer question. I am having major plumbing and sewer repairs done to my house.
Yeah.
Is any of that deductible?
Sewer repairs on a personal residence, no, they don't go anywhere. If they become significant and they enhance the value of your property, you can deduct them when you sell the house.
Oh, they are significant.
Yeah. But for example,
you're having to replace.
Yeah, for example, Susan.
Yes, go. Sorry.
Oh, okay. For example, if you pay a rotor bill, that's just an expense and forget about it. But if you have to redo the sewer pipe and you put in something that enhances the value of the property, then you can do what we call capitalize it and add it to the cost of your property. And then when you sell it, that's where you pick up the deduction.
Yeah, we have to take out all the galvanized pipe in our house and replace it with modern pipe. So take a wild guess as what that costs.
Oh, well, my wife's favorite number is 50 million. So,
yeah, well, let's just say I'm helping to boost the GNP.
Yeah,
I'm keeping destitute plumbers employed.
There's an oxymoron for you.
Yeah,
but I will say this: it also is keeping carpeting people and drywall people employed.
There you go. All right. Susan, it's always good to hear your voice, ma'am. Thank you.
I need to keep all the receipts, though, in order to deduct them when I go to sell the house, which probably won't be for 20 years.
Yeah.
You got it.
Mm-hmm. Or more.
Thanks, Susan.
Okay.
We're going to come right back. We have Dave and Dave.
Okay,
Dave and Dave of Beverly Hills coming up in just a moment. Many other phone lines open. If you have a question, a tax question for Walt Kero, or resident CPA from Kero, Byington and Associates, and the phone lines are open, as is the KGVO app, if you'd like to send your question in that way. So we're coming right back after this.
Montana State News Network.
I'm Dennis Bragg. State officials are investigating another report of avian flu in a flock of chickens east of Missoula. State veterinarian Tani Shemensky tells me the HPAI virus was confirmed after testing over the weekend. Now officials will be canvassing other poultry owners in the immediate area. It's the second outbreak of the bird flu in recent weeks. The Department of Livestock responded to another case in Flathead County at the end of October. In many cases, the virus spreads from wild waterfowl to poultry. Montana Representative-elect Troy Downing is promising to hit the ground running, both as he wraps up his work as the state's auditor and insurance commissioner and for his new assignment in Congress. Downing won quickly during last week's general election, completing a trio of 3 veterans for the state's congressional delegation, along with incumbent Representative Ryan Zinke and Senator-elect Tim Sheehy.
We've already been, speaking to my colleagues in D.C., make sure they know that, Montana is sending 3 combat vets to D.C. here in a couple of weeks, and just want to make sure we hit the ground running. We've got a lot of problems in front of us, a lot of issues in front of us.
Downing says one of the first tasks will be looking to reverse what he sees as the bad policies of the Biden administration. Some wild new numbers about the number of robocalls Montanans are receiving at the end of 2024. An analysis by Whistle Out found that Montanans are receiving as many as 112,000 robocalls a year. That works out to 100 per person. The fall's effort to catch and remove non-native lake trout from Flathead Lake turned out to be a huge success, with organizers with the Confederated Salish and Kootenai tribe reporting the largest catch in nearly a decade. The Lake County Leader reported that Fall Mac Days event saw 151 anglers net well over 18,000 fish this year, the most since 2015. Up to $200,000 in cash and prizes awarded in the program, which has been used as a management tool to get the non-native trout out of the lake in favor of bull trout and West Slope cutthroat. This is the Montana State News Network.
To protect his home and family from disaster, Steve used courage, wisdom, and his camera phone.
That should do it.
Way to go, Steve! By simply taking digital pictures of his family's important documents, Steve can always have them stored safely online, no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
If I could be you.
And you could be me for just 1 hour.
If you could find a way
To get inside each other's mind.
Walk a mile in my shoes. Walk a mile in my shoes.
Walk a mile in my shoes.
We've all felt left out. And for some, that feeling lasts more than a moment. We can change that. Learn how at belongingbeginswithus.org. Brought to you by the Ad Council.
Walk a mile in my shoes.
Hey, welcome back. This is Talk Back. Walt Kero joining us here in the studio this morning. And the phone lines are lighting up, as always, for his great general tax advice. We have Dave, number 1, standing by. Dave, good morning, sir. You're on Talk Back. Hi.
Hi, Dave. Are you the famous one?
No, I'm not the famous one.
Oh, okay.
Well, you're famous now, Dave.
We bought a house in 2011 for $310,000, and we'd sold it last month for $825,000. And are we going to have a tax liability because of that?
Okay, just on its face, Dave, are you happily married?
Yes.
Okay. And the house is jointly owned. In other words, the title to the house is in both your names?
Yes.
Okay. Let me see. Who was it? Somebody earlier asked a question about the sale of a residence. Oh, it was John. Anyway, the tax law, Code Section 121, for you code nerds out there, allows in a jointly owned house, and you own and live in that property for 2 out of 5 years prior to the date of sale this year, you can exclude $500,000 of gain. So your numbers are perfect, Dave, because if I take $825,000 and subtract $500,000 off of that, where are we at? 325? Just simple math, 325. You bought it for 310, so that means you have a taxable gain of $15,000. But I can tell you, if you sold it through a realtor, your commission was probably $40,000-$50,000 on that, and that you would add that to your basis. So you have a reportable sale, but it's not going to create any tax in your situation.
Okay.
That what you wanted to hear?
No, I'm sure that he desperately wants to pay as much tax as possible.
Well, I want him to pay the least amount.
Okay, thanks, guys. Have a good day.
Okay.
Thanks for the call. You can send a check to the IRS just for fun if you want, but I'm just kidding.
Yeah.
All right, we have another Dave on the line. Dave.
This must be the famous Dave.
Hey, Dave. Good morning.
No, yes, good morning. No, it's infamous.
Oh, infamous. Oh.
Yes. About the IRS. A lot of people hate the IRS, but, in my view, it's like hating the police force for the laws. The laws are passed by Congress, and IRS just enforces the laws that are on the books. And if you don't like the laws that are there, you go to Congress. Don't blame the IRS. Don't blame the policemen for their laws. And we need a functioning police force to do their good job and enforce the laws. We need a functioning IRS to do their job. And if the next administration cuts the cost, cuts the money out of them, I mean, it's bad enough as it is. My wife's a CPA, and she'll spend 2 hours waiting on the phone, waiting to talk to an IRS agent. And that just costs her money, and it costs the client money. And we need the IRS to function well.
Oh, hey, Dave. I agree with everything you've said, and I've been on the phone for 2 hours with the IRS as well. But, and I'm sure your wife does this, is you plan accordingly. So I work on other projects while I'm waiting on the phone. So that's what I do, and therefore you don't have to, just sit there and eat it and charge it to one client. You can go do something else and make good use of your time while you're on hold. In fact, I got to do that later today. Call the IRS.
Right. And, that's what people just blame the wrong people. Blame Congress for these screwed up laws. My wife, like you, I'm sure, hates the laws. They're too complicated. But it is what it is until Congress changes things.
Yeah, well, to me, screaming and yelling at the IRS like kicking a dead dog, it's not going to do any good. And the IRS, I almost think, I don't think this is true, but it's easy to think of this, is that Congress set the IRS up to be the whipping post deliberately. That way they wouldn't have to listen to all the angry taxpayers. Now, that being said, I've been in the IRS national office in Washington, D.C., and I've seen that part of the IRS. I've seen a lot of things in my life over that, but I agree with you, Dave. All the people out there, if you get angry at the IRS...
Wasted energy. Yeah,
wasted energy. Focus that on your congressperson, whether it be a rep or a senator. They're the ones who need to be yelled at.
And IRS individuals are not perfect, just like policemen aren't perfect. There's bad apples in the group, and we deal with them as we can. But it's a tough situation. But government needs money. It needs money to operate its processes, and taxes are one of the ways they do it.
Oh yeah, yep. You bet.
Dave, thanks for the update and thanks for the encouragement. We appreciate it. We're going to get right back. We have Jeff and Ed both waiting and several other phone lines. If you have a tax question for Walt Kero, he's only here for another about 30 minutes or so. So give us a call, 721-1290. We've had a very busy morning, but it's great answering all these questions. We'll be right back.
Yes.
When you thinking about retirement, make sure a My Social Security account is a part of your plan. A My Social Security account gives you secure access to your personal earnings history and benefit status. You can find out if you're eligible to receive benefits, compare retirement benefit estimates at different ages or dates, view spousal benefit estimates, and more. Plan for your future. Open a My Social Security account at ssa.gov/myaccount. Social Security. Securing today and tomorrow.
Produced at U.S. taxpayer expense.
Okay, we are rocking right along this morning with Walt Kero, a resident CPA from Kero Byington and Associates, giving out all sorts of great tax advice this morning, and we will continue right now, and we get Jeff on the line. Jeff, good morning, sir. You're on with Walt.
Hi, Jeff.
Hey, good morning. Two quick things. First of all, I don't think I've ever heard anyone described as nattily dressed in a long time, Peter. So.
Thank you. I'm here all week.
Yes, I looked that up, and the original meaning of it means neat and free from dirt. So I'm glad that Walt is free from dirt.
Yeah, no dirt on me today.
There you go. This whole FinCEN thing is a thorn on my side because we, as a member of an HOA up here, as a member of the board, we have to file for it. And I actually applied to the Secretary of State and I haven't heard anything back, but I got something back from FinCEN, and it was the very typical government response in that it says that who is a beneficial owner? And, it's anyone who controls at least 25% of the ownership interest. Well, we have nobody up here who owns it because there's 15 of us. That means we each own like 7%. But that doesn't stop the government because they say if nobody has 25%, then the individual is a senior officer or has the authority to appoint or remove certain officers, is an important decision maker, or has any other form of substantial control. So the only exemption is they say if you are a 501c4, formally registered as a 501c4, then you can claim exemption.
Yeah.
In your mind, is it worth filing as a 501c4 just to get out of this? I mean, that's going to be a cost, and I don't really want to bear that cost, but I'm leaning more and more toward it just to be able to get the government off our back.
Yeah. Okay, Jeff. Well, here it's an interesting question you raised because I know that nonprofits, 501c3, 4, 5, 6, 7, 8, 9, whatever, are exempt from those BOI regulations. However, the HOA is, oh, God, what's the best way to describe it? It's a corporation and you have owners. And I kind of think you're stuck regardless. And so here's, I guess the bottom line is, well, which poison do you want? You want FinCEN or the IRS? And the FinCEN report, as long as there's not a change in the ownership or significant other in terms of advising on that or control, you don't have to file that form until there's another change, if any at all. So I think the least amount of poison is with the BOI. But that's just my opinion.
According to that logic, anybody who anytime somebody sells property or buys a property, our beneficial ownership has changed and we have to file an update?
Yeah, that's correct. Mm-hmm. Yeah. But there may be an exemption if it's small, like a 2% or, again,
there's clear as mud.
Yeah.
In terms of doing this.
Another thing with HOAs, Jeff, aren't they? Uh-huh. You have percentages of ownership. Can't that be just a membership organization and treated like an association?
Well, here's what I was going to ask you. We are registered with the Secretary of State as a domestic nonprofit and mutual benefit corporation with members. I don't have anything that says we're a 501c4, but we're registered as a domestic nonprofit and mutual benefit corporation with members. So,
that discussion, Jeff, may qualify for an exemption from the BOI, but I don't have all the details on that.
Yeah.
But you haven't had any luck finding that?
No, because like I said, I went straight. I went to the Secretary of State, and I also went to FinCEN, and I haven't gotten anything back from the Secretary of State. But FinCEN replied with this
gobbledygook.
My question. They said, we believe your question relates to our homeowner associations and housing cooperatives required to report beneficial information, ownership information. And they basically say that if you didn't create it by filing a document with Secretary of State, then it's not required. But if you did, it is required. So basically, any entity out there, LLC, whatever, that has a filing with the Secretary of State, and that could even be, I believe, a DBA doing business as. Mm-hmm. If somebody is out there, Joe Schmuck doing business as Wally's Heating and Cooling.
Yeah.
I believe you still need to do a BOI because even though you're not a formal LLC or something else, you're registered with the Secretary of State as a DBA, doing business as.
Yeah, I'm not sure about that one. I haven't heard that. It's always wise to investigate that and find out first if it's applicable to you. But obviously, your HOA is something that's recorded with the Secretary of State, and it's not a DBA. But all I can do is say maybe I could help you and do a little bit of research or have some people help, because as I alluded to earlier, we have to do this for our clients, and we're toying. We haven't made a decision yet, but we're toying with utilizing a service that files those BOI reports for our clients. Obviously, it's going to cost, but is that cost worth the price for not complying? I kind of feel that the cost is going to be a lot less than the radioactive fallout that could happen from not filing.
And we are rocketing quickly toward the deadline.
Yes. Mm-hmm.
Yeah, you mean that what is it, $2,500 a day or something, that fine that you?
Yeah, it's
accrue.
Yeah, it's crazy. It's crazy cost.
It is. Well, if you, in your copious amounts of free time, if you can come up with an answer with that and report back to us in 2 weeks or whatever you get a chance to do that.
Now I've got two projects, but
all right.
Anyway,
thanks, Jeff.
I had not heard of filing agency. So if you can give any information on that as well.
Well, here's how I can do it without using copious amounts of time. I can check with one of the services that's trying to sell me and say, hey, what do you think in this case? So they may know off the top of their head too, Jeff.
Jeff, thanks for the call.
Well, super. Thanks.
We're up against a break. We have Ed standing by and several phone lines open if you have a tax question for Walt Kero. It's why he's here for another 18 minutes or so. He'll be glad to give you his attention absolutely free with general tax advice. We'll come right back after this quick timeout.
With KGRZ Sports, I'm Ace Hourwine with your daily update, brought to you by Republic Services. Grizzlies soccer head coach Chris Chidivitsky was no doubt sad in the way the season ended on Friday, but he was proud of the way the tournament unfolded in Missoula.
I've been to numerous of these already, and I just filled out my survey, which got sent to me to give feedback, and I thought it was run exceptionally well. Yourself and Andrew were tremendous on air with it as well. I feel like our online presence is good because of that. The indoor bubble was a wonderful training site for everybody because it's climate controlled and it rested the field. I thought we did a great job, and honestly, kudos to Sacramento for winning the whole thing. I'm a big Randy fan. I think he put together a great team. By the end of the season, they ended up figuring out a lot of things that were going wrong. He tightened up the way that they defend, and they ran with that all the way through the tournament.
The full interview can be found on the Daily Drive with Ace Hourwine podcast. That's a look at sports. I'm Ace Hourwine.
Need to replace your Social Security card? In most states, you can request one online with a My Social Security account. A My Social Security account gives you secure access to your personal earnings history and benefit status. You can also get a proof of income letter, estimate and apply for benefits, and more. Save time. Go online. Open a My Social Security account at ssa.gov/myaccount. Social Security. Securing today and tomorrow.
Produced at U.S. taxpayer expense.
We are back. This is Talk Back. I'm Peter Christian, Nick Christensen, producing Talk Back, waiting for your phone calls this morning. It's been pretty busy today with our guest, Walt Kero, our resident CPA from Kero, Byington and Associates. Ed has been waiting. Ed, go ahead, sir.
Morning, Ed.
Back to the... Hey, good morning. Back to the sale of a personal residence. Let's say a man and his wife have two places. They got a place in town and maybe a place, Flathead Lake, something like that. And they decide to sell the place in town. Now, they can go through the business of making, of course, they're living there 2 out of the 5 years. Once they sell the place, they move into their second place. And can they go through the process again on the gain involved with that house?
Yes.
On the lake?
The answer to that, Ed, is yes. However, and this is almost always true in tax law, if you use the lake house as a VRBO or a vacation rental and played those kind of games with it, then you have to prorate the capital gain exclusion. And it gets really complicated. In fact, that was one of my topics in my stack of stuff today, was converting a rental or a vacation home to a personal residence. And that's exactly your question, right?
Yeah, right.
Yeah. But if your vacation home was not rented, there's still a proration you got to go through. And it's based upon the length of ownership. So, am I making any sense?
Yeah, I think so. I think it's a little more complicated than
yeah.
Originally thought.
And I haven't researched it in depth, but I looked at it this morning, and it's based upon, so like, let's say you own the lake house for 30 years, and then you move into it as a personal residence, and you live in it for 10 years, okay? So then you take the gain and you prorate it based upon the length of ownership. So you had a quarter of the ownership is personal residence time, and the other 30 years, 3/4 of it is non-qualifying personal residence time. So if you have a $500,000 gain exclusion, then only 25% of that is allowed on the sale of that property. And so you got to pay the capital gain tax on 3/4 of that exclusion, or 3/4 of the gain, whichever is smaller. Is that's the way that rule works, and it's kind of crazy, but that's the way it is.
So if you just move into it for the 2 years, you're not going to get $500,000 exclusion.
No, it's got to be prorated.
Prorated, okay.
Yeah, prorated based upon, let's say you do that, and you've owned the property for 52 years. Well, two years out of 52 is like about 2%. And so then you multiply 500,000 by 2%, and so you get to exclude 10,000 a gain. So that's it's severely limited under those circumstances.
Okay, Phil. Thanks a lot.
Yeah, you're welcome.
Thanks a lot.
Yeah, they shoot messengers, don't they?
Yeah. Thank you for the call. Appreciate it, sir. All right, so Susan is standing by with a question. Good morning, Susan. You're on with Walt Kero. Hi.
Hi, Susan.
Good morning, and happy good morning to everyone.
You bet. Same to you.
My question is about the FinCEN. Is that a new program, and does everybody with an LLC have to fill out the forms?
Okay, Susan, if the LLC is registered with the Secretary of State or in the state where it was created, say like if it was created in Delaware, anything that's registered with the Secretary of State, and it's an entity like an LLC, is an automatic requirement for you to do the BOI report. Now, FinCEN, which I discussed before, it's an acronym, and it stands for the Financial Crimes Enforcement Network. FinCEN has been around for about 20 some odd years, but it was mostly created and has survived all these years on the basis of foreign bank accounts, foreign financial assets, and whatnot. Like the Swiss bank accounts and the Swiss brokerage accounts. The IRS got wind of a lot of income not being reported because it was earned in Switzerland and Luxembourg and various countries where there was no financial or income reporting. Well, the IRS worked out a deal with Switzerland, and so that whole thing blew up. And so the FinCEN's been around quite a while, but this new requirement is for beneficial ownership. And the answer is yes. If you're a for-profit business and your LLC is registered, you're caught up in those rules.
Okay, so the BOI is a different form than FinCEN form?
A BOI is a FinCEN form.
Oh, okay.
Yeah, the other.
I have an LLC in Montana, and it's been registered in Montana for quite a few years.
Yeah.
And last year I got which I didn't know, a nastygram from the IRS and said, well, you didn't file in time. And I played innocent because I was, and they forgave me.
Oh, good.
So now I know I have to file a month ahead of time.
Yep.
And so I have to, what form is it that I have to download and fill out for that?
For the FinCEN?
Or do I have to fill out a FinCEN and a BOI, or is that the same thing?
I'm considering that BOI is one of the forms that FinCEN has. The other form is for those foreign bank accounts and foreign financial assets. Okay. So yeah, but the BOI is something you fill out online. And the best thing to do is if you can, print out the form, and I hand write the information that needs to go in because I'm really rough and crude on key punching, kind of like Peter with his typewriter, hunt and peck.
That's me.
Yeah. So I'm the same way, but that's what I do when I fill out those kinds of forms.
Uh-huh.
Yeah. So,
and then do you mail it in?
Oh, it's filed online. You push a button and it's mailed in electronically.
Okay.
And
it's a BOI form.
Yep. Yeah. But just go into FinCEN. I think it's FINCEN.gov. And that should get you there.
Thank you very much for clearing that up.
You bet. Well, good luck.
You bet. Thanks for the call. And by the way, we had an entire program about that, with the Chamber Hour quite a while ago.
Yeah.
So if you go onto the KGVO website, hit Radio on Demand, and go to Talkback, if you scroll down, eventually you'll get to that program, and you can hear an entire hour conversation about just that, and it was very revealing.
Mm-hmm.
So
yeah.
Anyway.
Yeah.
So with that, we're up against a break, and the phone lines are clear. How about that?
Oh, my gosh, good.
721-1290 is our number, 1-800-568-5309. If you have a question or a comment for Walt Kero. He's here with us from the Kero Byington & Associates. He's our resident tax expert. So if you have a question, a general tax question, we have about another 8 minutes for you to get your call in. So we're going to come back after this 1 minute timeout. It's one of those beautiful. We are back. This is Talkback, and we are about 6 minutes away from being wrapped up. And thank you so much for all your calls. By the way, we still have time to take calls if you have a tax question. It's 721-1290. But you got stuff you want to talk about.
Oh, yeah. And this is a crucial time because right now, between now and December 31st, besides doing your BOI form, here's some tax planning strategies. And I've got 6 of them. This is an excellent article from this lady who's involved with tax planning and research and whatnot. Number 1, donate appreciated securities to charity. So Peter's got a welcome charity with his church, and he's got 100 shares of Tesla. You can get a fabulous tax deduction by donating the 100 shares of Tesla to the church.
Uh-huh.
You get a charitable donation deduction, and you avoid the capital gain on that Tesla stock.
And the church gets a new car. No, I'm just kidding.
Yeah. Anyway, that's one of the ways you can a tax strategy this fall.
All right.
The next is to make, for all those people out there like me that have a minimum distribution, you can make a charitable contribution of that minimum distribution directly from your IRA to the charity. It does 2 things. One, you don't get the deduction, but then on the other hand, you qualified for the required minimum distribution, and it's not taxable. That's a really cool thing, and I have several clients that do that.
Cool.
And, the next one, and this is one I brought up before, and I do this. I take my minimum distribution from my IRA, and almost all of that goes to has withholding federal and state. Thereby, I reduce or I don't have to do estimated tax payments. The cool thing about that, it's considered paid throughout the year. because the IRS treats that as withholding and considered paid throughout the year. So you avoid or minimize any kind of tax consequences from the penalties.
Okay.
Number 4, harvest capital gains. Okay, well, we all know what harvest is.
Right.
We're all walking in the tall grass, and we harvest that grass, turn it into hay and whatnot for the cows. But for capital gains and losses, you harvest your loss so that if you sold, like Peter did, 100 shares of Tesla and have a big gain, you take capital losses that you harvest between now and the end of the year to offset that gain.
Okay.
That's a common thing to do. Another thing, number 5.
See why it's important to listen to Walt. This is good stuff. Go ahead, please continue.
Number 5 is consider shifting deductions. So if you know you've got a big medical bills coming up or you want to make big charitable contributions, do it in a year where you can bunch things together, because our standard deduction is around $30,000 now. And so you want to do things in a year where you can get your itemized deductions way above 30. So you could do that. So
cool.
Like, just hypothetically, if you give $20,000 a year to charity, if you do both years at once, you'll have 40, and then the other year you take the standard deduction. That's just wise use of your deduction.
Okay.
The last one is if you have a trust or an estate, distribute the income, because the estate or the trust has a outrageous income tax rate, like 35%, after you get above $15,000 of income.
Right.
So it's always wise to strip out that income from an estate or a trust.
Okay, now we are coming up on, it's November 13th, and I think everybody knows that the new year starts in January.
Oh,
All
yes.
Right, so what should, we've got about a minute and a half here. What should we be doing right now to prepare for the end of the year so that when the tax time comes, we're not running around trying to find stuff?
Okay. Get yourself a box, a plastic bag, but I prefer boxes. And if you haven't done so, go through your files and your mail and whatnot. Anything that's tax related, or if you suspect might be a deduction, throw it in that file. Mm-hmm. Because if you have to do that when you're scrambling and stressed out trying to prepare your return, it's just like planning for something. If you create and have a place where all your information is, saves a lot of time.
Give us some contact information for the fabulous Walt Kero. Go ahead.
Okay. Yeah. You folks out there, you can reach me at 406-549-2288. Our website is kbcpas.net, and you can always, you can reach me those two ways. Sign up on Dave Ramsey, because I'm one of his trusted and endorsed local providers, and get to me that way.
You got it. Walt, always a pleasure. Thank you.
Hey, thank you.
Thanks for sharing all your expertise. And thanks for all the calls, folks. You guys were awesome. So, Mr. Nick, what's coming up on tomorrow's fabulous show, sir?
We'll have the Montana World Affairs Council with Bob Seidenschwartz, and a special guest will be talking about the Electoral College.
I like it. All right, super. So thank you all for your calls. You guys are great. Get out and enjoy this nice day, and we'll see you tomorrow morning, bright and early at 8 o'clock for another exciting edition of Talkback. All right, anyway, so we'll see you tomorrow, and have yourselves an absolutely terrific